$110,000 goes to the financial system, $30,000 to the worker. He takes all of the risk, puts in all of the money. Wall Street takes none of the risk, puts in none of the money.
And gets most of it.
They get the lion's share. That's where the money goes. It goes in the pockets of Wall Street. Risk, in my view, is more a function of the investor than the investment. People say, what do you think about gold? I'll say, well, how much do you know about gold? What do you think about real estate? Well, how much do you know about real estate?
Right.
I love entrepreneurship, and I love the stock market actually for people that understand it.
Right.
The problem with the stock market is not investing in stocks, it's investing in stocks with no education. But when you can surround yourself with great people and great advisors and great teachers, having a simple bookkeeper is not that expensive to have on your team and to help you with your discipline. And
Money Revealed is an exclusive video series where self-made millionaires share their secrets on how they got rich. In this episode, you'll learn how to make smart investments, destroy the limiting beliefs that hold you back, and retire without going broke. These are the lessons that they don't teach you in school about making money. And we've partnered with the series creator Jeff Hays to bring it to you on my YouTube channel. Enjoy.
Don't invest another penny in your 401k until you watch this next interview with Andy Tanner. I was riveted, again, very contrarian in his attitudes. And I'm not here to give you the financial advice, but I am here to tell you that you need to listen to what this guy has to say before you move forward with those types of retirement accounts. There's a wealth of information here. His energy, again, is something that's going to stimulate you into thinking and taking action. Enjoy my interview with Andy Tanner. Well, Andy, I'm excited to have this conversation because you have a reputation for having a lot of passion around this subject of investing. So,
for sure.
Yeah, so I'm looking forward. So thanks for taking the time.
Oh, thanks for having me. I'm excited about this.
So how did you end up in this career that you're in? Like, what was your trajectory?
Well, I started out like most people, went to school, and I didn't go to school for any particular major. I'm 6'8", so they hired me to play basketball.
I was going to say, did you have a basketball scholarship?
Yeah,
You're 6'8". I feel like a very small person sitting next to you.
I tell people I couldn't shoot, I couldn't jump, but I could foul. So they found a spot for me there. And when that was over, I just got into the workforce like anybody else. I struggled to find what I want to do, so my wife and I were in very low-paying jobs. And what was interesting is in the year 2000, when the market fell, we had small 401ks. We were just getting started, but they were really, they were drastically hit. And I was puzzled because I felt like we were taking the advice that everyone was telling us to take. And I thought, boy, if this happens again, and I started to research. And the more I researched, the less impressed I was.
Right.
And I got angry, actually. And I thought, people need to know this. And so through that research, it channeled me into being an educator and a speaker. And so now for the past 25 years, we've had the opportunity to travel the world and as a student and a teacher to share the things I've been learning with others. And it's been amazing.
So what did you discover about 401ks, and what should people know?
Well, you get me going on this. It's very passionate. To really understand both sides of the 401k coin, it's important to know the narrative and the history.
Yeah.
I don't know that there's anything financially that more people are involved in that they have less knowledge about than plans like the 401k. And so the first thing I would say is that there was never a think tank or a brain trust of smart women and smart men that got together and said, hey, how can a middle-income worker really set themselves up well for retirement? Let's build a plan. That never happened. To understand retirement, let's go back to the beginning. Let's go back to where retirement began. There was a company called American Express, and they weren't always about credit cards. They were a courier, like UPS or Federal Express. And in the late 1800s, they said, let's have a pension. Let's get people in, and we'll pay them while they work. And if they work for us for many, many years, we'll continue to pay them. And you'll never be rich, you'll never be prosperous, but you'll survive, and we'll give you a little pension. And that was where the first pension was really born.
Wow.
Some people want to be an entrepreneur, some people want to be investors and really try to prosper. Other people just want survival. And this idea of a pension, that you'd never be rich, but boy, it would help you survive, it really changed the American dream for a lot of people.
And gave a sense of security, I imagine.
Yeah, we'll make that trade, some of us. The going for the freedom instead of taking the security, that's a popular trade, and it changed education. Because think about it, our great-grandparents, after high school, if they went, you could go work on the farm, you could go in the military, you can go workforce, maybe you go to college. But with more and more companies saying, hey, we'll take care of you, we'll give you a pension, we'll take care of you, well, going to college and learning to work at a job became really, you go to the job fair. And there's really two types of people. Some people are scared of losing their job. Some people are scared of having one.
Right.
And so it was. So people would say, hey, here's the program. Go to school, get good grades, go to the college, land a job, work there for many, many years, and get a pension. Well, in the 60s, you might remember, if you're a history buff at all or a car buff, is there was a company called the Studebaker Company.
Oh, sure.
And they had these cars, and they had a union and workers. Well, they fell on tough times. People weren't buying Studebakers, and when you looked at that company's finances, they couldn't pay their workers. They were going to go bankrupt, and you had all these workers saying, what's going to happen to my pension?
Right.
And so that was kind of the beginning of the end of pensions that we've seen happen. And they went to President Kennedy and said, hey, what can you do for us? And he said, ask not what your country can do for you. But in reality, he said, okay, we'll see what we can do. And he established a commission to study this problem of companies that were not funding their pensions properly, that put the worker at risk of not being able to retire. Well, he unfortunately was assassinated, and President Johnson didn't do much, and Watergate took over Nixon. But in 1974, almost 100 years since that first American Express pension, they signed something called ERISA. And ERISA was a legislative idea to bring these businesses up to snuff, to say, look, you're going to have to take care of not only the worker, but the spouse. You're going to have to prove to us that you're allocating funds properly. And the regulations, businesses hated these handcuffs. They hated these regulations. And so it created a greater enmity between business and the worker. And all of this set the stage for the 401k.
When did the 401k come into existence?
Well, it came into existence in the fall of 1978. So ERISA, the Employee Retirement Income Security Act, was in 1974 under President Ford. And President Jimmy Carter was trying to push some legislation. He was worried about, the 3 martini lunch that we would deduct from our taxes. And so in 1978, there was a huge fight over taxation and how this is going to work. And a person really wants to understand how this stuff works. Is President Carter will say, well, here are my ideas. And then Congress will push back and say, no, here are our ideas. And you establish bipartisan commissions to say, let's see what we can do. And so there was a senator. He was from New York, and he became later congressman, and his name was Barber Conable. And he had some constituents, 2 lobbyists from Kodak and from Xerox. And they had noticed that in the 60s, there had been a provision for rich bankers to take profit-sharing bonuses and pack them away. And this is important because a rich executive, they don't need this money. It's extra cash. And so to them, it's a tax problem. Well, Xerox and Kraft said, hey, we want the same thing for our execs. So they got in this congressman's ear, and he said, well, let's just put in this little paragraph. And a young attorney, Richard Stranger, in his 20s, wrote less than 1,000 words, and they slipped this into legislation under what was called Section 401k of the tax code of the U.S. And what it did is it said, we'll open this provision for other companies. And went unnoticed mostly. It's tiny, under
huge tax
under
code.
1,000 words, in the tax code. And in 1980, the world changed. There was a consultant. He's a wonderful man. His name is Ted Benna. And Ted Benna was a pension consultant. He was working with a bank that had a tax problem. And he said, hey, let's see if we can maybe use this 401k statute to help your rich executives get these bonuses. We'll change how it works. We'll make it pre-tax, which will save the company money. And he pitched it to them. And they had a huge problem. And this is really where the story really goes into a new chapter. You got to sell this to a bank teller. And if a bank teller is going to forego their Christmas bonus for tax purposes, that might save them, $40, $50. That's not exciting. Where a rich executive, it's thousands of dollars.
Right.
So you had a disparity.
Yep.
And so how do you get a bank teller to say, yeah, I'll participate? And Ted said, what if you gave them an employee match? What if you, and it was literally bait, literal bait, to say, how can we convince these people to participate? And they went to the bank. They said, boy, this would work great, but they didn't want to be the guinea pig. So they said no.
Okay.
And so Ted said, well, I'll start at my own company. And on January 1st of 1981, the very first 401k program for retirement for employees was set up.
Wow.
And it caught on like wildfire. The important thing to notice is that at no time was someone worried about this worker. They were worried about saving money for Main Street, for the business. And so that was the first chapter. Well, as this took off, you can imagine what Wall Street saw. If you're a mutual fund salesman, you say, my gosh, people are going to be put on autopilot. Before they even get their paycheck, they're going to buy my products.
Right.
I don't tell people to get in or out of 401ks, but I would suggest that every person look at both sides of the coin. What do I get out of it? But what do the people helping me do this get out of it? And the mutual fund industry changed forever. As of today, we have about $7.5 trillion now collected in these mutual funds and these defined contribution plans.
Wow.
And if there's one point I would communicate and beg and plead people to understand would be this. A pension is income, isn't it? You collect income and you pay expenses, and you collect income and pay expenses. And that pension would last for life. You would receive that money until you died.
Right.
And so in financial education land, we call that a cash flow based idea, that a pension was a function of your cash flow, it was a function of your income. The moment that Ted Benna made that switch for his first company, it stopped being a function of cash flow and it became a function of your balance sheet, your net worth. Now think about that for a minute. Bills happen every month until you die. And so as long as that money's coming every month, that liability is on your company. They have to figure out how to send that check out every month.
Right.
But the moment they switched to where you contribute, now it became a function of your net worth, became a function of the balance sheet rather than the income statement. That's a huge difference because now there's an hourglass of time. And you have to look at that balance and you have to say, will that last me 20 years? You never had to make that decision under a pension. And now people who were educated to get jobs now are forced to invest. They're forced to learn about mutual funds or stocks or bonds or paper assets with no training.
So basically what you're saying is the 401k supplanted the pension. So people say we're doing away with pensions, and then the employees are just going to contribute, and that sits on the balance sheet of the corporation.
Supplanted is a kind word. It killed them.
It killed them.
Absolutely killed them. Why? Well, if you're a business, your employees are a liability to you. They sit on your liability column. They're a promise you've made, and you have to deal with that. By giving them that bait of that match, saying, here's this little match, I'll give it to you. When they snatch that up, they now wash their hands of that responsibility. And now a worker who drives a truck or works on an assembly line or isn't an accountant, an attorney, or an investor now has to shoulder the burden of retirement. This was supposed to be a tiny little tax code.
Well, I was just about to say is that the consideration for the formation of it was a way to get tax-free income to highly paid executives.
It was to recruit better talent.
If it was going to be something that was going to be more pervasive and wage earners were going to start utilizing it, I'd imagine they would have written it a bit differently.
Imagine that. I'm putting money into something every month called a 401k that was never designed to do what it's doing. If you were to use the phrase, the law of unintended consequences, there is not a better case on planet Earth of that law than the 401k. Well, the next chapter of this is Wall Street.
Yeah.
The most important word or phrase on Wall Street is assets under management.
Right.
That's how they make their money. It's fees.
Right.
The larger amount of money they can collect, the more money they make. And so that's a rough thing when all of a sudden you can just hear the champagne corks popping when they said, my gosh, we're going to take money out of their paycheck before they even see it.
Right.
And they're going to buy our products, and we'll have those assets under management. The thing that's scary about this is, as investors, you and I would, if you were a real estate investor, you'd look at a property and look at its merits before you'd invest. Or you'd look at a business and look at its merits. You would never be on autopilot just blindly buying things because you were on schedule to do so,
Right.
regardless of the price, regardless of the economy, regardless of where it's going. But the mutual fund money, people know, dollar cost averaging means this. Send me your money when the market goes up. Send me your money when the market goes down. Send me your money when the market goes sideways.
Right.
In other words, no matter what happens,
Send me your money.
Send me your money.
Right.
How much risk do they take?
Yeah. Oh, they take none.
They take none.
No, they're getting a piece of all those dollars every month.
And so when you look at their profit, that's an infinite return because they have no money in the deal of their own.
Right.
So they have an infinite rate of return and absolutely no risk.
And a lack of responsibility in many respects too, right? Because if they perform poorly and the market goes down based on how they're behaving, the person who gets hurt is the person who worked for the money. They still get their fees.
If you go to these money managers and you say, my balance is small, who will they blame? You're not saving enough. You should give us more money.
Right.
They will blame you every single time. You're not saving enough. It's your fault. People are not saving. And that has been the banner. They have enacted, the next legislation was 2006 under President Bush, where they said, hey, we need the Pension Protection Act, which really doesn't protect pensions. It protects defined contributions. Right. And they said, look, we're going to make this automatic enrollment. See, before then, you had to go into your human resource department and say, hey, I volunteer, I'd like to participate. Now you have to opt out rather than opt in. And so imagine just look at the other side of the coin. If you're a mutual fund salesman, you get to have a product where people buy on autopilot if they have a job and they have to opt out from buying your product rather than opt in. In this whole narrative, there is not one instance where anyone had the interest of a middle income or low income worker in mind ever. It was either the rich executive wanting to defer a big bonus, or it was a company trying to help their bottom line, or it was the mutual fund industry. Imagine $7 trillion under management, whether it goes up, down, or sideways, that's a lot of fees they get to take.
Yeah.
I've had the opportunity to talk with Ted Bennett personally. He's a wonderful man. He's a gentleman. And he's often asked if he feels if this is a failure. He says, well, Andy, number one, how can you say it's a failure if it was never intended to shoulder the burden of retirement, number one? And number two, we've helped people save $7 trillion. Well, you can look at that a couple of ways.
Yeah.
You've also helped Wall Street accumulate $7 trillion, which is their engine to make them money. And the tough thing, and the thing that makes me so passionate about this, is the worker. You know, I knew we were going to have a chance to chat today, and so I took the liberty of printing out a report from Vanguard. This is called How America Saves 2018. It's Vanguard's defined contribution plan data. Of the $7.5 trillion that are in these plans, Vanguard has more than 1.2 trillion of it.
Wow.
So this is an excellent sampling of where they are. And it's interesting because if you look at age, there's two numbers that we ought to discuss. The first one is if you look at people 45 to 54, and they're staring at retirement, the average 401k balance in Vanguard for this age group is just under $130,000. Now that might sound exciting. It's six figures. That's got to last 20 years of retirement. But more important than the average, because if you have a few millionaires at the top, that drags that up. More important than the average would be the median.
Yeah.
And what does the median mean? Well, that's the guy in the middle,
Right
in the middle. That means half everyone is above, half everyone's below.
Right.
The median is 70,000. Now, if you plan on having a 20-year retirement, that's $300 a month.
Yeah.
So while Ted might say, well, how can you call it a failure if we've helped people save trillions? Well, for these people, it's a failure. And these are the people I care about. Imagine that. Half the participants at this age, if you go to 55 to 64, that's $71,000 in the mean. That's people. People that are 65 and over, $64,000.
It goes down as they're getting older.
64.
Wow.
Well, they're not able to put money in anymore.
Yeah.
And so this is at a time where we have a stock market at all-time highs.
Yeah.
So here's the question. Where'd the money go? If the stock market is all-time highs, and I'm looking at these types of balances.
You took the words right out of my mouth. I mean, average rate of return, all those years they've been in it, where did the money go?
Don't take my word for this. Please, I admonish people, study it for yourself.
Right.
The person who founded Vanguard is a man named John Bogle. He's written many books. He's a great proponent of the small investor. In fact, he actually left the company he started, which was Vanguard. He actually started as a MBA thesis, I believe, and said, I'm going to go do this. But he left the company. He's become somewhat of an advocate. And the way he teaches this is something every investor should investigate for themselves, in my humble opinion. It's called the law of compounding costs. And the way he states it is he gives an example that I cite often of a worker who's, say, 20 years old. And they look at an actuarial table and say, okay, he's going to die at 85. So the mutual fund company is going to say, all right, that's 65 years of investing. We can get his money. How do we do this? Let's say they take, he starts with $1,000 and doesn't add to it, just $1,000. And he throws it in the stock market and he gets maybe 8% a year. Well, the power of compounding is something else. I mean, that is over 65 years, that's going to wind up a little over $140,000. That's the power of compounding. The problem is that's if he gets the 8%. Now, that's what they're getting. Behind the curtain, it's growing at 8%. But if they take fees, let's say they take 2%, 2.5%, that means that on his statement, even though the money's actually compounding at 8, he's compounding at 5.5. And in that same time period, he won't have 140 grand. He'll have 30.
Wow, makes that big a difference?
$110,000 goes to the financial system, $30,000 to the worker. He takes all of the risk, puts in all of the money. Wall Street takes none of the risk, puts in none of the money.
It gets most of it.
They get the lion's share. That's where the money goes. It goes in the pockets of Wall Street.
So first, that's startling.
Yeah.
The 2.5% that's taken translates into the lion's share over time of the upside. But most people, the attitude is, well, why would I go in for? Well, I'm putting money in tax-free. They're still going to pay tax at some point, but the fees become another form of tax.
What's interesting is the fees, they've gotten better as competition's gotten better. But when people work the numbers, they'll still see that the lion's share go, and it's silent. You know, it's interesting. If I were to ask you how much you pay for your phone bill, you could show me.
Right.
If I say, what do you pay for health care? You'd say, well, here's a aspirin for $75 at the hospital, and here's how much my insurance will cover.
Right.
If you go get a massage at the end, they say, this is your ticket.
Right.
But when you ask people what they pay for financial advice, no one can tell you that number.
Wow.
It's that stealth. And yet it's something we do every month, every single paycheck. They cannot tell you what they pay for financial. They can tell you if the price is right, what a gallon of gas is, what a carton of milk is. They cannot tell you what they pay for financial advice.
It's kind of like, well, if I put money in the bank, I just watch the bank balance. So that's what they feel like they're doing. They're just watching a bank balance, not understanding the dynamics that are going on around their money.
I'm glad you brought up a bank balance, because this is one of the bigger lies I feel they sell. Most of this legislation is passed in the name of us not saving enough money. As a matter of fact, even some of the reports call this as savings. Nothing could be further from the truth. There is such a large difference between investment and savings in terms of the way it works and the risks involved. It's night and day. For example, if I save money, I put in what's called a deposit. I take some money, I hand it to the bank, they go put it on the shelf and lend it out to people. But when I buy a mutual fund, they're buying stocks. I'm a purchaser of an equity. I'm in the equities market now, most likely, or the debt market. And so there's it's much different than having cash and having an inventory. Because think about this. In a savings account, you earn interest. Minuscule as it might be, you're still earning interest. But in a mutual fund, you're paying fees.
Yeah.
You're paying. If you want that money, and this is important, if you want that money out, you simply go make a withdrawal. I would like my money back, please.
Right.
But if you want to liquidate investments, you have to have someone to buy
Right.
what you're offering. It's entirely different than savings. So think about this. I have a saying that if you want to see the future and have a crystal ball, policy and demographics gives us the future. So you bring up a great point with savings and investing, because think about this. One of the provisions in the 401k and pretty much all across the board in retirement plans is the government wants that tax eventually.
Right.
And they need it, believe me. They need that
Yeah.
revenue. One of the things they weren't counting on was the massive participation in this and the fall in tax revenue. They weren't ready for that. That's why in the Reagan years, they tried to kill it. They tried to say, hey, we're losing all our tax revenue. So they had to build in a point where they would pay taxes. Now think about this for a moment. Many people are angry with Obamacare because they're mandating, they're making you do something. They're
Right.
making you spend money whether you want to or not.
Right.
You should be able to choose whether you want to do something or not. What's worse than making you buy something that you don't want? How about forcing you to sell something that you do want? So at age 70 and a half, that's the magic number, you are put on what's called a distribution schedule where you are required. Notice the cutting edge of the word required. This is not a suggestion or a plea. You are required to liquidate those assets on a schedule in order to pay those taxes. Now think about this for a moment. You have 79 million baby boomers in the United States, probably another 15 million in Canada under the same thing. When those people, they're hitting the 60s now. When they hit the 70s, when you have 79 million people having to push the sell button at the same time,
Oh, yeah, it's going to tank the market.
who do you have in mind to buy all that stock?
Right.
China going to buy it? Would you if you were them?
No.
And so you have a demographic of millions and millions of people that are going to be forced to sell in order to pay their taxes.
And then the value of that account literally can sink very quickly. You might say, oh, I have this much accumulated. But that's value based on current market.
That's correct.
And that can vacillate, and that market starts to drop, that value can go way down. And they, as you said, if they're defining the period when this is going to have to get sold, wow, I mean, and I imagine there'll be a lot of opportunists coming in to short that, to help facilitate the whole process.
We don't know how it will affect the market.
Yeah.
All we know is that that's a lot of mandatory selling pressure that has to happen.
Yeah.
We don't know how it'll affect the market.
Yeah.
But that brings up even a more important point, is if someone really wanted to study this, they said, Andy, what should I study? What should I learn? I would study risk. I would study two types of risk. The first type of risk we would call something you could diversify out of. I'll give you an example. British Petroleum, their stock symbol's BP. Well, it's supposed to be British Petroleum. Some people call it broken pipe because they had, you might remember, they broke a pipe in the Gulf and big environmental problem. Their stock was cut in half. Well, if you were diversified and you only had a few shares, you'd be okay. And so that's what they scream in the 401k. Don't be a stock picker, my word. Diversify, the opposite of Warren Buffett's advice. Diversify, diversify, diversify. What they will not tell you, and I challenge anyone with a 401k to ask their financial advisor this, how are you dealing then with systemic risk? Now, what is that? If the whole system begins to fall, if the whole system, like in the dot-com boom of 2000 and the bust, and then the subprime meltdown of 08, both of those cut the market in half. So what are you doing in a 401k to manage those risks? There's a correlation between risk and control. More control you have, less risk. Less control you have, more risk. No control, it's gambling.
Right.
And if you retire after one of these crashes, you're selling off so many shares at a discount. And so instead of buying at a discount, you're selling at a vast discount.
Right.
It can crush people in retirement, especially if you only have $70,000 in there in the first place.
So to a large extent, you're relying on luck because nobody knows when these cycles exactly are going to happen. So you're hoping, or it's, am I lucky or unlucky? Was the market up or down when I needed to sell?
Yeah.
Also, if the 401k account it's held for your benefit. It's not really your account, right? So how does that work? Because I see the FBO, by 401k. It's like, so if the government needed for some reason or emerging circumstances to grab that money, they could?
Well, I don't know it would be the government, but I'll tell you where you're right on key is people say, well, I have this much money in my 401k. No, you don't. This money belongs to Wall Street. They're the ones that collect the fees on it. They're the ones that get to use it. They're the ones that get to invest it as they please and as they see fit. If you think they're just sitting on this, let's think again. They're collecting fees. But if you really think this is your money, try to go get it.
Yeah.
If you think this money belongs to you, try to go get it. Because what you'll find is if you want to get this before you're 59 and a half, they're going to charge you 10%.
Right.
So if you have to pay to get something back, it's obviously not yours, is it?
Right. Pay 10% plus taxes.
Plus your taxes. Yeah. And taxes are an interesting thing too, because, people will, they'll get after, it was really funny watching the elections, and I'm not political one way or the other. I just kind of sit back and shrug my shoulders. But there's always pressure on candidates to release their taxes, to say, how much did you pay? How much did you pay?
Right.
And the reason many candidates don't is because they don't pay any taxes.
Right.
They're investors.
Right.
A guy like Mitt Romney or a guy like Donald Trump, they're not going to release their taxes. Why? Because they don't pay any. They're investors.
Right.
In fact, let's say that an investor gets capital gains in the past, which used to be around 15 to 20%, rather than the 40 to 60 that doctors and dentists can be paying if they really count everything.
Right.
Well, if I'm a doctor or a dentist, and I have my account and I see I'm paying 40, 50, 60% taxes, I see these investors paying 15%. I say, what gives? Well, they say, look, a guy like Trump and Romney are investing. They're taking more risk than you are. And so they're going to get lower tax rates. Guess what? If you put money in a 401k, you're dodging ordinary income tax. Well, when you pull it out, guess what you're going to pay? Ordinary income tax. So you're taking investor risk, but you're not getting investor tax benefit. You're getting employee tax benefit, even though you're taking investor risk.
Well, now, so let's talk to that group, the engineer, the doctor, the lawyer, what have you, the professional that probably has been funding a 401k their whole career. Now they're 50-ish, on the sheet, that you just read. And but maybe they're in the higher percentage of what they've accumulated, but they're looking saying, wow, this didn't work out the way I thought it would. And I'm subject to having to, being forced to take this money out in the future, or maybe I even need to take some out now. And it's not all there.
Yeah.
So what kind of investing advice do you give them? They maybe have some money, so it's not like they got zero, but they don't have enough to retire. And they don't want to keep working another 20 or 30 years doing the stuff they're doing today. So what's the advice?
Well, first of all, I never tell anyone what to do with their money. I always stay away from advice because I know something, and this is very important. Education is more valuable than advice. The advantage the doctor, the dentist, the engineer have is you're smart people. In 4 years, you learned how to do a root canal that I could never learn how to do.
Right.
In much, much less time, you can get educated on these investments. Let me say this. Risk, in my view, is more a function of the investor than the investment. People say, what do you think about gold? I'll say, well, how much do you know about gold? What do you think about real estate? Well, how much do you know about real estate?
Right.
My advice to those guys who see the writing on the wall, they pull out their statement after what we've talked about, and they say, you know what? I'm not going to make it. I'm going to run this 20-year marathon, and they're going to extend that finish line out another 20 years.
Right.
I'm going to be having patience. I'm going to be taking orders. I'm going to be at this desk for, in my 80s at this rate.
Right.
What do I do? Smartest thing you can do is get educated about being an investor rather than an employee. Look, if you want to make money as a dentist, go to dentist school.
Right.
If you want to make money as an investor, go to investor school. And there's no shortage of information to learn how to do these things. I love real estate. I love entrepreneurship. And I love the stock market actually for people that understand it.
Right.
The problem with the stock market is not investing in stocks. It's investing in stocks with no education.
Right.
The problem in real estate isn't investing in real estate. It's investing in real estate, not knowing what you're doing. So my advice isn't to take your money out, because then you go in the frying pan of the fire, but to say, hey, what am I interested in? What do I want to invest in? I'm going to be a smart investor.
So the primary risk is really ignorance.
It's the biggest risk you have. Right. I can give you a list of Berkshire Hathaway's investments. Give them to someone who's ignorant. Say, try to copy this. They can't do it because they don't have the investor education.
Really interesting. So also you used a phrase earlier that I think is worth understanding. I think average rate of return.
Yeah.
Because average rate of return isn't the same thing as what rate of return I might get, over some period of time. Isn't there some timing that has to do with that?
It's a real big mistake. If you read the fine print, one of the things you'll see in every investor relationship, any document, any interview for discovery or suitability interview, is that prior returns do not indicate future results ever.
I think I've seen that once or twice. Yeah.
and so if you look and say, well, historically this has happened, to think that will happen in the future, look, the world has changed. This is not your grandpa's stock market. The volatility is greater. The amount of debt out there is greater. The amount of leverage is greater. And the storm clouds I see from where I sit are visible, clearly visible. All you have to do is look at the United States government and say, what does their balance sheet look like?
Yeah.
Well, they certainly have a deficit that's sizable. We owe $20 trillion on balance sheet, and then the promises to the baby boomers are in the hundreds of trillions.
Wow.
Rough water. If you want to see what's likely to happen, look at countries like Greece and Argentina and places like that where the fiscal irresponsibility is spilled over in their markets. It's not a pretty picture for the buy and holders of 401ks.
Well, because I look and I say, just using very easy math, if a stock market is at 5 and it goes to 10, it went up by 100%. It doubled.
It doubled.
Right? Then if it pulls back down to 5, it reduced by 50%.
Now it has to double. You got it.
So now it's at the same level, but I could say there's an average of 50% rate of return. Am I thinking about it kind of right there?
Well, the way to really think about it is this. If I have $100,000 and I have a big crash and it's reduced to 50, I've had a 50% drop, right?
Right.
But now I have to have 100% gain to get it back.
To get it back.
So the drop is always less, but the growth is always double.
Right.
And it's tough to get 100%.
So now I'm 100% convinced education is a critical thing. You ask all the questions that I might not know answers to, and getting educated is important. And I think you made a good point, especially for professionals or virtually anybody, that it's not like this is a rocket science type study. If you've got some, especially higher education, this is not something that's going to challenge you.
Sure. A decision to make is this. Do you look at skills for hire in your life? A root canal for me is a skill for hire. Delivering a baby, skill for hire.
Right.
But there are also life skills, tying my shoes, brushing my teeth.
Right.
Unfortunately, the management of money has become a skill for hire instead of being the life skill that it really should be for every person. It's not taught in school. Yeah. Most people don't know the difference between a deficit and a debt, a balance sheet or an income statement.
Yeah.
But I'll also say this. One of the blessings I have as a person who was not I didn't go to the Wharton School of Business. Okay, I was a basketball player just trying to stay eligible to play. And so for a guy like me of average intelligence, how do I do it? I build a team. Most people are solos in their life.
Right.
They go to work, they have a boss, and they worry about themselves. But when you can surround yourself with great people and great advisors and great teachers that not just tell you what to do, but educate you on why you're doing it, having a great accountant, having a great bookkeeper, even if you consider yourself a low-income person, having a simple bookkeeper is not that expensive to have on your team and to help you with your discipline in investing and saving. Having a great accountant, having great attorneys and great advisors around you, it can really pay dividends in the future.
How do you vet them? I mean, how do you know who's great?
If you were an entrepreneur or if you were a person who wanted to be an entrepreneur, the first thing I would say is, what are you passionate about?
Right.
Because there's probably someone making money in that passion.
Yeah.
There's a wonderful restaurant I love locally, and he was a mortgage broker, and he loved to barbecue in the backyard. Decided one day to take the plunge and start a barbecue, and now, he's sold that for millions of dollars.
Nice.
And so you find your passion, and then you find someone in there, in that area, and you say, who's your attorney? Who's your accountant?
Right.
Who's on your team? And I found that's the best way to build a team around you, is to find people that are doing what you want to do and say, hey, who's on your team? Because likely they'd be happy to be on your team as well.
Right. That's actually really good advice. Referral, word of mouth, kind of
Absolutely.
the old-fashioned way, if you will.
Yep.
Any other considerations? So I've got to get educated. I got to build a team. Any other considerations?
Well, I will tell you this. there are a lot of storm clouds out there, and there's a lot of problems that you can study, but there's silver linings on every one. You know, as I look at my own children, I get excited because there's never been a better time to be an entrepreneur. It's never been easier to do. The use of technology and the leverage we have with communication and the web, a person can now start a business easier, faster, with lower risk. You can fail 10 times before you get it right. If you're willing to miss the ball a few times, it's easier to do that now than ever before. And the other good news is that for educated investors, crashes are actually opportunities. I get excited when there's a pullback. If you know how to position yourself properly, you might be on the verge of some of the greatest opportunities ever. You know, there's a book called The Big Short. It was put into a movie, not for the kiddies, but put in for a movie. And people often walk out of there and say, boy, I wish I could see the opportunity for a Big Short. Go look at the United States balance sheet and your opportunity is coming. So by getting educated, by building a team and understanding that opportunity out there to increase your wealth and prosper individually is better than it's ever been.
So, and with that, is that a reason to maybe stay in cash rather than fund a defined benefits account like a 401k, so that when those opportunities come, you have some cash to be able to take advantage of it?
I think you always ought to have a little cash for a rainy day. But I'll ask you this. Do you think the value of the dollar is going to go up or down?
Well, it's going down. There's no choice.
If I told you gold was going to go down, would you hold it or get rid of it?
Get rid of it.
But you know what? If there was one asset I'd bet on losing value, it would be the U.S. dollar. So putting a lot of that in savings to me doesn't really make a lot of sense. If I wouldn't hold gold if it was going down, if I wouldn't hold stock if it was going down, why would I hold cash? So I think having some cash for an emergency to pay your bills is great, but I think it's one of the worst long-term places. You're just not going to outpace inflation with the rate we're printing money.
So I guess whatever you did put it, if it's somewhat liquid, because like you say, if there's a downturn in the market, and say now it's a great time to buy, you just want to have the ability to do that.
Yeah, you know, one of the important things that I do personally when I trade in stocks is I always know what an option is. People think options are risky and options are insurance policies. And the problem I see with 401k is there's no insurance. You own a home, if it had a fire, you'd have insurance. Well, which is more likely to burn down the next 5 years, your home or your 401k? And so you can buy small investments. This is what investors like Mark Cuban and Warren Buffett and George Soros do, is they buy small insurance contracts to insure their paper assets just like they would a home or a physical asset. So with education, there's things you can do to protect yourself. There's things you can do to capitalize on downturns. And you know, diversification in stocks is not real diversification. The market goes down. By having real estate, I love real estate, I love gold, I love a lot of asset classes, but they all have their own risks. And they all have their own set of education that helps a person understand those risks and manage them properly.
Great. Well, I really appreciate you spending time.
Pleasure's
this was
mine.
Very illuminating, to kind of get context for things. So thanks so much.
Thank you so much for having me, and it's just been a pleasure.
You're in for a real treat. This interview is with Roger Hamilton. And here's what's interesting. I had known Roger casually, meaning we had mutual friends and I'd be in places with him, we'd have good conversation, and I didn't really get deep into his knowledge, understanding, and wisdom. I could tell you one thing. He always had a light about him. There's just some energy that came off of him that was very positive, very engaging. But when I sat down to have an interview and actually dig in to his view of things, to see his perspective, and to understand the wisdom that he's accumulated over time, I have to tell you, I was so thoroughly impressed and so excited and took so many notes after the interview that I had to write down saying, geez, I need to remember this and I need to remember that. So many lines in there that resonated with me that I can't wait now to share this with you. So enjoy my interview here with Roger Hamilton. Roger, really happy that you're here. You're a brilliant guy and I can't wait to hear what you have to say about this topic of money.
Thank you, and good to be here.
Yeah, so you've got quite an entrepreneurial background and you have certainly a lot of perspectives around money and even train entrepreneurs, around these concepts of understanding not just how to make money, but really what money is and how it relates to human beings.
Right.
But let's start kind of with your background. How did you get into the stuff that you're doing today?
Totally by accident. I was actually studying architecture in Cambridge. My dad wanted to be an architect. I decided that's what I should do as well. And it was actually while I was at college that I had my first business experience. And it really started because I was at the end of my first year. I was rowing in the college boat, and I had my director of studies who said, you can't be rowing and you can't be doing architecture at the same time because the time commitment was so massive. And he actually warned me at the end of the first year, unless I could actually spend the whole summer on my portfolio, then I was out. So I was like, oh my gosh, what am I going to do? Because I have to do that, but I also know that like my big dream is to be able to get into the first boat, which means I've got to go in the training camp. And in addition to that, all my friends who had jobs down in London, they were all saving up to go to a trip in Greece. And I really wanted to do that, but I had no job because my parents were back in Hong Kong. They didn't know people in London. And so I was sitting down, feeling sorry for myself in the pub one night in pretty much the last week of school before the break. And I just got a little pad and I wrote down, what if I was to add all three of my problems together and turn it into a question? And so I said, okay, how would I make enough money to go to Greece while being on rowing camp and fill up my portfolio? And it was like, ta-da! It's like from there, I was like, okay, I'm gonna have to do drawings in Cambridge for the tourists so that I can actually do that during the day, make the money, and then in the mornings I'll go rowing. And that's what I did from day one. I just went out there, did this, and I had the most incredible experience making more money by doing that than if I'd gone and got a job in London and being able to get into the rowing camp and being able to go go to Greece. And all of this taught me that at any point, your problem is also your source of your greatest profit. And so from there, it really got me addicted to this idea that I could always find a smarter way to solve other people's problems. And that's really what entrepreneurs do. And one thing led to another, along with pretty fateful like a viewpoint I had from someone called Buckminster Fuller, which switched the way that I thought about my life and also got me on this journey of being an entrepreneur.
So what was it that you heard from Buckminster Fuller that changed you?
Well, in architecture, we were learning about different people that had all sorts of inventions they'd made for architecture, and he was the creator of the geodesic dome. And one of the things that I read up about him was he had this concept which was called the final exam. And he said that because he was a futurist as well as an architect, he said that all of the world's challenges were distribution challenges. So for example, when you say there's poverty, it's not because there is enough money, it's just not distributed effectively. Right. Or if you say there's hunger, right? It's not because there is enough food, it's just not distributed effectively. And he said that technology allows us to distribute far more effectively. And even then, in the 1970s, there was already enough technology to solve all the world's problems. So he said, so why have we not solved them? And he said the reason we haven't solved them is because of our human consciousness. And the technology keeps accelerating exponentially. And so if we don't watch out, we have the possibility of actually not passing this exam. And if we don't do that, it's the end of civilization. He says either consciousness will accelerate enough to harness that technology and we will solve the world's problems, or it won't, in which case technology will eventually destroy us. And we have a window of time, which he didn't specify how much that was, but I was guessing it's maybe 20, 30 years. And I don't think we're too far out from that in order for us to actually be able to solve these challenges. And for me, that was such a massive shift in thinking in terms of the fact that I'm living at this time, we're all living in this point of time where it's a make or break, that I thought I shouldn't be building buildings, I should be building businesses, really designing the future, because, as they say, best way to predict the future is to create it. And that's what entrepreneurs can do.
So captivating, that vision that he laid out. And it's interesting that many people, they have that kind of pivotal moment where, from something they heard, something a mentor said or whatever, that light goes off and there they are. Yeah. But I'm curious, because you said you started drawing, in London. So that was, and incidentally, I don't want this to go by too quick either. You solved your problems by what? Asking a question.
Yes.
So I want to learn more about the details of how you solved it, but do you have a premise that the quality of our outcomes is based upon the quality of the questions we can ask?
Absolutely. I really believe that every day our life is determined by the quality of our questions. And I mean, the word quest in questions is about that idea that whatever quest we're on today is the size of the question. I mean, like, if my biggest question today is what I'm going to have for lunch, right? That's as big as today's going to get, right? But if I'm thinking about what today I'm doing to solve a much bigger problem, whether it's something that's going to be an impact to my family or something of impact to a much wider community, well, then of course I'm going to be in a much, much bigger quest. So I think that's so important. I also think, this point about most people getting stuck on problems, as opposed to converting those problems into questions and realizing the source of their biggest problem is also the source of the biggest profit.
Wow.
There's so many examples of entrepreneurs that have said, well, I've got this problem. Others probably have this as well. What's the way I can figure out the solution to this? And then, of course, they're solving it not just for themselves, but for everyone else as well.
Well, we definitely have to have a whole conversation around that. But I'm sorry that I'm so curious about this. But what did you do to make this money? So you're in college. You said, I'm going to draw for tourists.
Right.
So what did you draw?
So, and by the way, this idea of consciousness shifting, which comes from the quality of questions as well, that was my experience in my very first week, right? So what happened was I thought, oh gosh, I've got to figure out a way that I can get a drawing done every day, have people want to buy it as well. I don't want to be able to just draw and then just look for someone to buy that drawing. I want to figure out a way to print it. So I decided I was going to do them in black and white of different sites of Cambridge. I was going to basically sit down on the spot, be drawing during the day so people could see me as they walk by.
And freehand, like an artist.
Yeah, freehand.
Wow.
Yeah, so I did drawings of famous things like King's College Chapel and so on. I do it in black and white so I could photocopy it. I would make it the right size so that I could actually get freezer bags from Sainsbury's and make it look really professional and put it in there. I got a big sign up, which basically was a photocopy, which cost 5 pence, but it was a nice photocopy on nice paper. And where I said, one print for, £2, 3 prints for £5. And so I would have that board and then I'd start drawing. And what happened in the first day that I did this was I made about £50, which is about, let's say $100 at that time. Which was a lot because most of my friends were making maybe 200 a week in London. And I thought, wow, look, I've just gone and made 100. And of course, it's all cash, so I'm bringing this cash back. And that could have continued all week. But what was very interesting was because I had already realized the power of questions, at the end of the first day, I asked myself, what would it take for me to make double as much tomorrow? And of course, if you're in a job, you can't do that. You can't just determine your pay. But for an entrepreneur, you can do that. So I said, what would it take? And what I decided to do was, because I didn't know what the answer was I'll start testing things, right? So the next day, I thought, well, maybe it's about being in the right place, right time. If I was in a busier place, different time of day. So I sat in a different place and I started counting every half hour how many people were buying and how much they were buying. And I found that there was a pattern. And the pattern had nothing to do with the time of day. It had to do with how many people were stopping. If a lot of people stopped, then a lot of people bought, right? And so I started realizing that my real value wasn't in just my drawing. It was in my ability to slow people down. And so what I started doing is realizing if I asked people for the time, they'd stop and then others would stop. I then soon realized that actually if I wasn't looking for a person, but a group, like a family, and instead of asking for the time, I'd ask the child, hey, would you like to sit and watch me draw? And then, of course, they'd say, hey, mom, dad, can I sit? They'd sit, we'd have a conversation, everyone would stop, and then as a result, I'd end up making double, triple as much money during that time. Wow. I ended the second day, and I'd actually made at that point over £100, so I doubled my money. And then I got to the end of the second day, and I said, I'm going to ask the same question again. How would I double my money the third day? And the third day started. I went rowing in the morning. It was now about 10 o'clock, which is normally when I start the drawing. I found another spot. Most of the tourists don't show up until lunchtime. But as I was in this new spot, an American tourist came along. And he was with his wife. And he was just walking along. And he saw me starting to draw this drawing. And so he said to me, hey, how much does it cost for that drawing? And I said, oh, what, the one I'm drawing now? And he goes, yeah. And I said, no, I'm not selling this. This is my original, right? And he goes, oh, no, but it's beautiful. You've already started it. It looks fantastic. I want to buy that. And I said, I'm not selling this, right? Because you don't understand. I actually print this and then everyone, gets to actually have a piece of it. And it's worth a lot more than if I just sold it right now. And he says, oh, come on, everything's got a price. So that made me think, well, maybe everything does have a price. And if it has a price, what's the price? Because he's actually saying he wants to buy it. And this happens a lot, I realize. People who want something from someone and you're not willing to put a price on it, and then you're wondering why you don't have the money. So I decided to put a price on it. I said, well, I know that this drawing today, or this day itself, will pay me £100, because I knew that happened yesterday. So if he actually pays me £100 now, I won't have to do anything else for the rest of the day. So I said, £100. And he said, okay, done. But I want you to sign, let's start Roger Hamilton's unfinished original on it. So someone now has this picture somewhere in the world, right? Because he actually did that. I signed it. He bought it for £100. And then I got the £100. I was like, wow, that was quick. It's not even like 11 o'clock. I made the money for the day. And then I stopped. And then I thought, well, what am I going to do today? Because I've got the rest of the day free and I don't actually feel like I want to just go and just relax. I actually want to do this drawing. And so I just got another piece of paper out and I started the same drawing again. And as it turned out, that same drawing made me another 100 pounds during the day. And so I made 200 pounds. And it was that whole thought process of realizing that the moment you actually put out to the world the question, you don't even have to be the one that comes up with the answer. The moment you actually are out there, and we see this all the time today, you see Richard Branson saying we're going to take people to space, right? You got, Elon Musk saying, we're going to figure out a way to actually get off fossil fuels. And they don't have the answer, but just the fact that they're sitting in the question, everything else shows up as well. So that idea of consciousness lifting through the quality of your question, you can double, triple, quadruple your income. And my whole life has been about that ever since, and helping other people to do the same thing.
So it's really fascinating that at this young age that you're able to look at this, solve this problem. You obviously were geared to be an entrepreneur. You're unconventional in your thinking. Thought experiment. What if say that first day it didn't go so well, or maybe the second day it didn't go so well? What do you think that would have changed things, or do you think you would have kept going and figured it out?
I think that's a really interesting question, because I hadn't had enough of the experience of the payoff of perseverance at that point.
Right.
So there's every possibility I might have just quit and said this is not the right thing to do. I think that I got to a point in the number of times that I basically had something that failed, and then I saw the result in a positive way after that, that today I would keep on persevering no matter what. Right. Having said that, I think that there were certain things I was doing at the time which may actually have made me also continue. So for example, rowing is a really good example. Like, that's what I was doing. And rowing is a crazy sport because you're looking backwards the whole time. You can't actually make it work unless you're with a team. Right. Most of the time it's not working. And you have to persevere, right? So I was actually experiencing in other parts of my life where I was putting myself on the line with others, the power of continuing even when things aren't working.
Right.
I think many people don't have that experience. And so because they haven't had it, it's really, really easy to just give up on things without realizing that success is always just that next step after you're actually willing to sacrifice it all. And I think that's the big test most people don't go with.
Did you finish school? I mean, did you get your degree in architecture, or what happened?
I got my first degree, which was which was after 3 years, and then the RIBA, which is the qualification to be a practiced architect, is a 7-year course. I took a year out, and I realized in that year out, the actual decision making on design wasn't the architects; it was actually the developers, right? And they'd pay the architects to do but they could always veto the architect. So I remember saying to my dad, "Hey, Dad, I really want to be a developer, right?" And he goes, "We haven't got the money to be a developer. Be an architect first." And it was actually in my 5th year, I actually had the courage to say, you know what, I'm better off moving my thinking, especially with what I said earlier around Buckminster Fuller, and this idea that like time was so short that it really was time to shift from the idea of building buildings. Luckily today, I actually called my dad and I said at the time, "Hey Dad, I'm going to quit architecture. The reason is because I really believe I could be a developer. I could be out there, with properties that I could then hire architects to do." He says, "Well, good luck with that." And today, that's what we're doing with our resorts around the world. And so I'm now designing more than ever, but I'm doing it with architects that are now working for me.
So let's talk about your business activities. So there's myriad business activities for you. You just described one of them, which is you have resorts around the world. And I might say, I was looking at pictures of them earlier, beautiful resorts around the world. And the kinds of places, I guess you build the kind of places or buy the kind of places you'd like to stay at, or what's the theme in your resorts?
They're all entrepreneur resorts, actually. So they're actually designed for entrepreneurs to be able to come on accelerator programs, to be able to come and take that time out. And I'm a great believer in the power of environment. So we have resorts in Bali, in South Africa on a safari, in Thailand. These are resorts that are giving you the opportunity to get out of the city environment and actually be able to get a clear head to be thinking about your future and where you want to go. And there's almost like a spiritual experience when you're there. You really get this sense that there's something bigger out there for you to actually step into. So the resorts are one of the businesses, and Entrepreneur Resorts is a public listed company, which is growing at the moment with teams in different countries. Then we have a second company, which is called Genius U, which is a technology platform, which provides mentoring for any entrepreneur around the world that wants to get connected with other entrepreneurs out there too. And then we have a third company, which is Entrepreneurs Institute, which is where I do a lot of my training, mentoring. We have events like the Global Entrepreneur Summit that we run in different parts of the world. And what's really incredible is that we have a front row seat of the entire entrepreneur movement. This is something that was predicted some time back by the likes of like Charles Handy with the empty raincoat, where he said we're all going to be portfolio workers in the future. And what interesting thing is the Global Entrepreneur Monitor, which is like a group around the world that measures how many entrepreneurs they are. They predict there's going to be 1 billion entrepreneurs by the year 2020, which is phenomenal because there was only about 100 million in the year 2000, and like 1 billion people, that's less than the number of people that were on the planet, a century and a half ago.
Right.
So this is like the biggest vocational shift in the history of mankind that we're actually living through. And we're getting to see that in all these different countries in Asia, in Africa, where we have all these people who are deciding to be entrepreneurs instead of employees as they're, even at teenage age.
Is there like a spirit being unleashed, you think, in the world that's causing this big influx of entrepreneurs to enter the marketplace?
Yeah, there's a word for it, which is entrepreneur spirit, right? It's like there isn't a single entrepreneur that doesn't get there through entrepreneur spirit.
Right.
What I think is interesting is I think there was a time when the idea of being an entrepreneur was like an opportunity. It was kind of like maybe I could do it. But the challenge with that is, when you go through school is either training you to be in a job or it's training you to go to university, right? It's not training you to be an entrepreneur. We're actually getting to a time where being an entrepreneur is no longer a maybe, it's actually a must. It's better job security to be an entrepreneur, which is someone who knows how to create a job, than to be an employee, which is someone who has to wait and get a job, because there's so much risk in terms of whether jobs will even exist in the future in the way that they are today.
So, and that's, I think, I just want to pause, because you're saying so many things and stringing them together that I think are profound. So in part, your definition of an entrepreneur is someone who says, I'm going to create a job, as compared to a non-entrepreneur would say, I need to go get a job.
Absolutely. Yeah. I mean, like if I have an employee mindset, I say I can't actually make money unless I can go to the job ads or I can go to the job boards and I can find someone who's asking for a job, and then I have to compete with hundreds, if not thousands, of other people for that same job. Right. So that's what someone who's got an employee mindset will do, and that's why there's such fear. Because if someone doesn't give me that job, I'm not going to have money, right? Whereas someone who is an entrepreneur is someone who doesn't start from there. They don't even look at the job board. They start by saying, okay, what's the person I really want to work with, right? Who would be my customer who's the person who's going to give me money? And how can I make sure I can do something of real value to solve their problem? Which means going to whoever it is you want to work with and finding out what the biggest problem is, and then helping them to solve that, and even being willing to say, look, I'll give you some of my time for free to show you that I can be trusted to help you solve your problem.
Right.
You help someone solve a problem that puts money in their pocket, they're always going to be paying you for it.
Yes.
And so if you have that thought process, it doesn't just give you job security for life, because you can always create a new job. Like all the entrepreneur friends I have, none of them are worried about not having a job or not having a business, because they can always start a new one. They know how to do that. But of course, the power of that is you're not just creating a job for yourself. If you know how to create a job, you can create it for everyone else around you, which means you can create it for your children, right? You can create it for the people you love. You don't ever have to be in a situation where you feel the pain of someone that you really care for having to basically suffer because they didn't understand that it was all there in front of them, and all they had to do was create that value instead of waiting for someone else to come and see the value in them.
So also, I think maybe furthering that with your college experience, in that case, you're taking something that you had a skill about, because you were going to be an architect, so obviously you can draw, and you had to have some kind of a passion for it. And you said maybe there's some demand for this out there, and you went and tested it, and cost you almost nothing to go test it.
That's right.
Right, and you saw results right away. And you kept asking questions, that kept, leading you to higher and higher ground. So I think what happens a lot of times is that maybe people, or tell me if this is your experience, but maybe people say, hey, I do have a talent and something I'd love to do, but I just don't believe that I can make money doing this. Or maybe it's something from their mothers, fathers, teachers, preachers, told them that, no, you have to go get a job, work in a company, climb a ladder, get benefits. Oh my God, if you're an entrepreneur, if you go to do something on your own, you're not gonna have benefits. How are you gonna live without benefits?
Right.
So what is the barrier, do you think, is the biggest barrier that potential entrepreneurs face trying to get into get into making a job for themselves?
Our biggest barrier by far is our own mindset. By far. And I'll give you an example of shifting mindset. So my son, when he was 16 years old, he had to do a class project, as it was everyone else in the class. And you had to present the project at the end of the year. And he decided that because he had a very mathematical mind, and we had gone on trips to Italy where he had learned all about the golden ratio and the beauty and all of that. And he said, maths has got a basis in beauty. So he decided that what he was going to do was he was going to create a series of building blocks called the Fibonacci blocks. And the whole concept of Fibonacci blocks was, it was taking it off someone called Frederick Froebel, who was like the founder of the kindergarten, who said like kids think spatially, and he had this like wooden block set that he created. So he took that same concept of wooden block set, but he designed them all in the dimensions of the Fibonacci series, and he went out looking for how he could get this done in Bali, because that's where we're living. And he came to me and he said, how do I know if this is even worthwhile? And I said, the way you know if something's worthwhile is people are willing to buy it, right? If something's actually got something that people say, that's of enough value to me that I'm willing to actually pass you money for that thing, you're on the right track. So why don't you turn this into a crowdfunding project? And he thought, well, that's interesting. You know, he actually set up an Indiegogo campaign where he actually put on there his Fibonacci blocks. This was before he had even had them produced yet. And that was the barrier. It's like, well, how do I actually get the resources to be able to make these blocks?
Right.
But by putting it on there, he started seeing all these people getting really excited about the idea of having the blocks. They started actually paying money in to this bank account that he saw go to $1,000, then $5,000, then $10,000, then $20,000.
Wow.
And this was all within a matter of weeks. And as he saw this growing, he was like, wow, I'm gonna have to scale up my production here. But it allowed him to now have the resources that before he didn't have, as a result of showing the value first. It actually got to a point where he came back one day and he says, hey, I've been updating my teacher on what's been happening with this project, but my teacher was really enthusiastic to begin with, and now, like, the last thing she said is, you know, stop showing off. And I don't know why she's saying that. And so I sat him down and I said, well, you've seen where your numbers have just gone to. You've just gone over $20,000 within like a matter of like 10 days. Do you know how much the average teacher makes in a year? And he's like, $20,000? And I go, pretty much, right here in Bali, that's what they're getting. And that teacher isn't going to understand how you just made as much money in a classroom project within a week and a half that she makes an entire year. And once he got that, and he realized that it wasn't his problem that she was feeling that way or others were feeling that way, he continued on, and that project went over $40,000 before it was done. And he turned that into his own little business off the back of it. But that mindset shift was just that idea of saying, well, what if instead of me waiting for the resources before I go forward, or instead of complaining about the fact I don't have things, what if I turn it all around and said, whatever value I have, I want to share that with people to see if they see value in it as well. And if they do, and they're paying for it, I really believe that every kid should have a crowdfunding campaign just to test this concept before they leave school, because it is about that shift in mindset. Once you've had that one thought, you're always going to be able to actually go and repeat it again at larger and larger scale.
And that is the free market, right? I mean, that's what capitalism is all about, saying, you know, somebody produces something and the market decides if it has value or not, and nobody can force anything upon anybody else. It's free exchange.
I really believe that entrepreneurship is one of the very, very best ways to get to self-awareness. I think it's really easy to be in a job or to be in a situation where you're not actually getting the mirror reflection of yourself. In the same way you do as an entrepreneur, where if you don't have something of value, it becomes really clear really quick because no one's paying you money for it, right?
Yeah.
But the moment you do have something of value, you know it. And the market gives you direct feedback, especially today where everything's online, where everyone can find the things they like very quickly and move away from things they don't like. So your ability to every day get another lesson in self-awareness, whether it's a hard lesson or whether it's one that puts money in your pocket, right? Which is why I say as an entrepreneur, you're always either earning or learning.
That's a brilliant insight to say that being an entrepreneur is a path to self-awareness, right? So that's sort of this more spiritual side, saying, you know, how am I going to get to know myself, understand who I really am, what really matters to me? And when you're working 9 to 5, you know, in the confines of a job that you have maybe just because you need to survive, as compared to saying, how would I express myself and what would people pay me for that? You know, it's really two different things.
And it goes very deep because like we have so many frameworks within the things that I teach, which are based on self-awareness and self-mastery. I believe entrepreneurship and this whole idea of raising consciousness comes from three things: self-awareness, then self-mastery, then self-expression, right? And you can only get to self-expression, which is where all the money gets made, if you've actually got clear on self-awareness first. So as an example, the Japanese have this concept which is called ikigai, which is your reason for being. And it's more than just purpose on its own. It's the combination of what you love, which is your passions, what the world needs, which is your purpose, what you're good at, which is your talents, and then what you get paid for, which is your business model. And it's the intersection of all four, because you can do something that can pay you really. I mean, there's people who have a job or their life and they go, well, I'm getting paid well, so I got to stay in this job. But it's not their passion. which means that they're actually getting into poor health because of it. They're losing energy because of it. It's not their purpose, which means it's meaningless. It's not something which actually drives them. So it's about how do you really every day with the business that you start, make sure that to begin with, you've got a way to ensure you really are passionate about it. So you're energized every day, that you've got something that's purposeful, which means that you're going to be doing it even in the tough times, that it's something that's following your talents, which allows you to build a team of other people who've got different talents. Then the business model will always be there for you, because there's always, whatever you're going to do, someone else in the world who has got very much the same purpose, talents, and passions, but has figured out a way to already be making 10 times what you're making, right? And so by just understanding and learning from them, there's always a way to be able to make the money. Most people just aren't thinking that way, which is why they're then trapped in their own mindset.
There's a significant wealth gap that's emerging, and I think growing greater every single day. And it's a disturbing trend to many people. Other people say it's just a natural way of things. How are you seeing this?
I think there's a big misunderstanding of what the gap actually is. You know, there's all these reports that constantly come out about how the top 1% own so much of the world's wealth, without realizing that this gap isn't about a pie where because someone's got the pie, you don't have the pie, right? The wealth in the world is always growing, right? Like my son with his Fibonacci blocks, you know, Luke didn't take money from anybody, right? It's like he was creating new value that wasn't there before.
Right.
So the way I see the gap is it's a little bit more like, you know, if you and I went for a run and there was a race going on, one of us would beat the other one, and that gap would be just the difference between what you have and what I have, right? If you happen to get on a bicycle because you figured out there was a way to get there faster, and I wasn't even thinking of a better way, I wouldn't go any faster, and the gap suddenly gets bigger, right? And if that bicycle becomes a car, and then you then upgrade to a rocket ship, and you get, look, if I have a better vehicle, right, I'm going to be able to get much further than I could before. And you're not even trying to beat me, you're just beating yourself.
Right.
I mean, that's what Mark Zuckerberg did. That's what Jeff Bezos did. It's what Elon Musk is doing. They're just finding smarter and smarter business models that allows them to go faster and further than they did before. Someone who's in a job or someone who isn't thinking in that way, they're just running, right? They're just using their own energy, their own time. And of course, that means the gap gets bigger, because what they then can earn in a day is totally different from someone who's actually got vehicles and mechanisms to add a lot more value with a lot more people to be able to get there a lot faster. And so, like, I shouldn't complain and try and knock you off your car or motorbike in order for me to feel better about you going slower. I should just say, well, I can learn how to also get the motorbike, or, you know, and there's plenty, there's enough motorbikes for everybody, right? There's enough planes for everybody.
Right.
And I really believe that today there's enough even education available for people to understand how to fly.
Right.
It's just that most people aren't aware of it, or they're too busy kind of running to even stop and actually say, wait, let me just take the time to fly and start that business or that investment vehicle. Because everyone who's actually most successful, the Richard Bransons of the world, they write it down. They're telling us how to do it.
Right.
And so that's where we're living in a world today, which we weren't living in quite the same way 50 years ago. So there's a real advantage today, but you have to take it.
Well, it's interesting. Your analogies are really good, because what's encouraged in a free market is for people to figure out a bicycle, then a car, then a rocket ship, what have you. In oppressive type economic environments or political environments, pretty much it's like, hey, get off your bike and start walking again. You know, you can't go that far out ahead. It's not permitted. It's not allowed. It's shared misery in a sense. You got to move as slow as everybody else. Maybe a little bit faster is okay, but you can't like just get on a bike or get in a car. And that basically forces everybody down, right? It doesn't allow emergence of a better quality of life.
Well, in the case of entrepreneurship, it's actually almost the opposite. I mean, if you go to Africa, if you go to China, India, you're seeing a much, much faster rate of growth in entrepreneurship than you see in America.
Only because the environment around is allowing it now, whereas maybe some years ago it didn't, right?
Yes and no, because I think there's always an alignment between value creation, which is where entrepreneurs start showing up, and even in dictatorships, even in oppressive societies, they still are looking for everyone to be as productive as possible, right? And so if someone actually is able to start a business in some way, and that then actually helps the government, right? It takes people into jobs and so on, then they're not going to be against it necessarily. So I think there are a lot of things that, such as free speech and so on, which are the kind of things that government's going to be more focused at. And as long as the government's getting paid and they're getting their taxes, right, they're going to be continuing to move on. But I think that today, there is less of an excuse than ever, really in any country, for someone to say, the reason I can't be successful is because of the government or because of large corporations or because of the weather, right? Like there is less excuses available today than ever. And I think that's a really, really important thing, because it's the easiest thing, if you have the wrong mindset, to put in the way of success.
Yeah, I agree. I think, probably ever since the end of the Cold War, that's where we started to see that things started emerging. I mean, in fact, when China started becoming more and more and more productive, and what they've become as an economic superpower now, because people individually can benefit from their success, as compared to saying we're going to take it all from you and it gets recirculated and everybody has to have the same income. So now I guess is a great time to be an entrepreneur, right?
I think it's an amazing time, and I'd say that the bigger thing that I think generally stops people from the idea of going out and being financially successful, even more so than the government or anything external there, is their own belief that making money in some way is evil, or in some way is the opposite of making a difference. It's like profit and purpose don't go hand in hand. And there was a lot of reason for people to think that 20 years ago, right? Because the whole basis of running a business was it was there for the shareholders, for the people that wanted you to make profit. So how could you go and make a difference if you had to go and make all the shareholders happy? Now, all around the world, we've seen this massive trend towards social entrepreneurship, towards, like social corporate responsibility, where even the biggest companies in the world now are saying, actually, we can link purpose and profit together, right? We can make income, we can make impact. And in fact, because we have so many conscious people who are consumers now, who would much rather eat healthy food, or have more responsible healthcare, or are going to make sure that they're only going to be working with companies that are making a difference for the environment, right? That because there are so many people now saying that's the company we want to actually be going for, then we'd much rather work with them. Jeff Bezos says, there's only two kinds of entrepreneurs in the world. There's missionaries and mercenaries. And the irony, missionaries are the ones who do it for the mission, mercenaries do it for the money. And the irony today is that it's actually the missionaries that make the most money, right? It's possible to do both at the same time. So anyone who's still got that excuse, which is like, no, like making money means that I'm not being meaningful, or it means that I'm not making a difference, they can't have that excuse anymore, because the reality is the best way to make a difference is to be doing it in a way where you're truly delivering value to as many people as possible. Yeah,
and that really is in a true free market, where there's not, any type of manipulation of that marketplace. Then in the end, that's what it is. Basically, the more people you bring value to, the more money you make, and it's kind of a simple justice, isn't it? The people who do the most good should get the most reward. It's kind of like that simple.
Yeah, absolutely. I think that there is a fear that many people have, which is that either they're not good enough, right? Or that someone else is already doing it, so why even bother? Without realizing there's 7 billion people on the planet today, right? And there's always someone somewhere who has a problem they want solved. And if you can show yourself to care enough about them to want to solve their problem for them, there's always money there for you. There's always a job to be created. And once you understand that and get that, the concept of the lack feeling that you have, which is like, oh my gosh, there's not enough, really goes away. And it's easier said than done. But if you surround yourself with other entrepreneurs, if you go into entrepreneurial environments, and we have them all over the world, right? And when people show up there, they're like, like finally, I don't have to be spending all my time in fear or worry, because there's an actual way here that I can always make sure that I've always got enough, right? We had within our resort in Bali, we had someone who came out from Europe, from the Netherlands, and he was a top trainer in the Netherlands, and he said, I've got an issue with my mindset, I've got to change the way I'm thinking. And I said, well, you'll change it here, right? Because when you get here, you have a whole different relationship with money. He says, I don't understand what you mean by that. And I said, well, just spend a few days here, you see what I mean. Next day, morning time comes, he comes in, and he's so excited, and he says to everyone there in the accelerator program, he says, what Roger said yesterday, I so get it already. And everyone's like, well, what happened? And he goes, well, I was like, just going for a walk this morning, and I go into the village, and there's a market there, right? And they're selling bananas. And you would not believe it, but where I'm at in Netherlands, it's like, what is it, like 5-10 euros to buy my bananas? And here I am, and he's telling me the price of the bananas, and it's like less than €1. And I go, my gosh, I'm spending all my time like working for what? Like for expensive bananas, right? And I can get them so cheap here in Bali. I mean, I could already be financially free just living here, right? And he brings us this, I bought the bananas, right? And I look at him and I'm like, why would you buy the bananas when there's a banana tree outside?
Well, you just pop that balloon.
But everything's already out there. You know, one of the schools that I am a big fan of, my kids went there. It's a green school in Bali,
yeah.
and I set up. It was John and Cynthia Hardy who set up the green school. I set up the board there when I joined, and the green school's really grown and it's got a big name all around the world, even though it's in a small island like Bali. And as an example, when the kids go to art. You know, we don't think about the fact that when kids go to art in the Western world, we're teaching them dependency. Like we're saying, hey, here's the paints, here's the paper. And so then, you're teaching them, you can't actually paint unless you have the paints and the paper. It's like you can't make money unless you have a job. In the green school, they start by saying, okay, let's talk about paint. Where does paint come from, right? It's like paint comes from nature, right? And how would we make purple paint, right? Like let's start with beetroot, or let's see the difference of when we start with an eggplant, and how do we turn that into paint? And so the kids make their own paint in the class. How do you make paper, right? Well, you can take cow dung and you can turn it into paper. The kids are making paper, and so what the kids learn is not dependency, they're learning sufficiency, self-sufficiency, that no matter what, I can create something from nothing because nature already provides everything. And the moment we get that, then we never have any fear whatsoever about wealth. You know, I say true wealth is not how much money you have, it's what you're left with if you lose your money. Like if you can lose all your money and still be absolutely okay because you have the ability to make it at any point, right? That's true freedom. And everyone can get there much faster than they think.
And that is really I think a profound observation. Is that if you have money, wealth can always be at risk, one way or the other. There can always be at risk, but so you never feel free if you have that fear or attachment. But if you're saying, I'm self-sufficient, not because I have all this money in the bank, because I am who I am, and I can recreate it, which means that now I don't have to worry, and maybe I can go cut some bananas down in Bali, and I'll be just fine.
A mentor of mine, way back in my early 20s. Said to me, the true key to success is gratitude. And the best way to exercise gratitude from a financial point of view is to give yourself a thought experiment every day, which is to ask yourself, what would I be doing today if I knew that tomorrow morning I'd lose everything, right? Like, what would I do today? And of course, if you think about what you would do if you'd lose everything, I mean, even if you were very successful, right? What you'd be doing is you'd be investing time in your relationships. You'd be investing time in adding value to people. You'd be investing time in seeing where opportunities are today. You'd definitely make sure you're up to date with the latest things that are going on. And as a result of all those things, you'd be very comfortable that you could leave it all tomorrow, and then you'd be able to start all over again. I still do that today because the other thing it does is as you start building assets and building wealth, it's too easy to take all of those things as you, right? The biggest thing that stops people from moving forward is the comfort level they have with where they're at, to say, I don't want to risk what I've got, without realizing that because of that, they're not doing the things that they'd otherwise be doing, investing in the relationships, investing in the knowledge. So most people think, well, I'm just going to spend my time trying to hold on to what I've got, instead of actually realizing, you know what, I could actually be growing these other areas of my life already. You know, there's 3 different types of capital that make up all self-worth and wealth. And if you think about it like an iceberg, where the top of it is financial capital, most of the world just sees people with financial capital and they think, well, they're the wealthy people. But the only way they got to that financial capital is having invested their time in social capital, which are the people they know, and in intellectual capital, which are there's knowledge they've built and the products they've made. And if you focus at just those 2, social capital every day, like who am I meeting new that are the right people I should meet with? What are the things I'm learning? It's just inevitable that if you follow the right pathway, your financial capital will result from these 2. And if your financial capital gets taken away, these 2 don't go away. You've still got them.
Right.
You know, when Elon Musk 10 years ago was broke because he had invested all his money in Tesla, in SpaceX, you know, he was sleeping on Peter Thiel's floor. But Peter Thiel himself was like very wealthy, and he had the right contacts in the right way that he invested, which allowed him to actually get out of that situation in a way that if he wasn't thinking about that, and he was just thinking about trying to do it himself, he would be broke today. And I think that's one of the most important things for most people, is that you've still got the time outside of a job, or still got the time outside of whatever you're doing right now, to be building those 2 and doing it every day.
So then it gives credence to the concept of you got to be really careful about who you're hanging out with.
Absolutely.
Right? Because a lot of people are hanging out with commiserators that talk about, you know, how the rich have all the advantage and poor us, and, you know, we're downtrodden. And if that's your mindset, then you're not building relationship or social capital.
Yes.
It's better to try to find the people that are what you aspire to be and be around them.
Absolutely. And one of the things that I find really interesting is that thought process, which is hang around with people who are at a high level is something that people hear, but then the question is, well, how do I do that, right? And one of the most important things is to know there are frameworks that now exist in the same way that, if you think about flying a plane, if anyone says, could I really fly a plane? The answer is 100% you can, but you've got to go and make sure you've gone to flight school and you've learned how a plane flies and you've flown enough hours with someone who flies as well. So with entrepreneurship, it's exactly the same thing. And just without going into detail of it, a number of the frameworks that we've created that now we've had close on 1 million entrepreneurs around the world that have taken are things like our wealth dynamics test, which shows you that you've got a natural path out of 8 to create your true self in your natural flow, your true wealth. So Richard Branson as a creator is going to make his money by being really good at creating new ideas. And then from there, he's going to have a team that can actually execute, right? Or Warren Buffett isn't interested in new ideas. He's going to be investing in the things that are actually proven ideas already. And he's called an accumulator. He's got a very, very different set of talents that he uses. And understanding when you know the framework, that the way to really build your success is by getting the right team in place of different talents. That's one really critical thing. And then we have something called the wealth spectrum, which actually is that there's 9 levels of consciousness. And if you really want to lift your consciousness next level, don't try and just spend all your time with a millionaire who doesn't actually see how you're going to deliver value to them. Spend your time with someone who's at one level up, who already is needing you to help them in their business. And then from there, you become their level. Then you go another level up where now you've got a high-performing team. Then another level up where you're able to be an investor. And each one of these doesn't take that long to get through. But most of us are trying to trampoline our way to success and then wondering why we keep falling back to where we started, as opposed to taking the ladder where there's one specific step at a time.
So this is a really good segue into an area I want to explore. So now, very compelling, everything you're saying. People out there are like, okay, I'm waking up. I think I want to be an entrepreneur. I shouldn't be doing what I'm doing, going to this job every day. There's no future in it for me, and I'm not fulfilled by it. So do they just jump right in, or is there a preparatory part of this? How does this all work?
The most important thing is to know where you're at and then where you're going. Like to get a really clear idea of your vision of where you're going, and then to realize that wherever you are right now, there's always going to be a first step. And so I'll just give you an example of that. Like if we look at these 9 levels I mentioned, the bottom level, and we actually put it into something called a lighthouse because it is about you turning on your light. And the bottom level, which is the infrared level, which is the victim, is someone who's in debt and going in more and more debt every single month. Now, this is not good debt that's making you money and making you cash flow positive. This is debt that's making you cash flow negative, right? And if someone's at that level, I've seen way too many people, quit their job, jump into infrared level where they're just emitting heat waves now, where they're in a panic because they actually are running out of time. I mean, really, like they're running out of money. And if you're at that point where you need it more than people need you, you're never going to win, right? Especially if you're trying to do it on your own. So at that point, a lot of people say, yeah, but Roger, you said I should follow my passions, right? And I'm like, not at infrared level, right? At that level, like if you're over-consuming, right? If you're over-consuming and you are wanting to go on a diet, right? Imagine having a dietitian who comes up and says, oh, the diet you need to go on, given that you've eaten too much, is follow your passion. So what are you passionate about? Chocolate cake. So that's what got you in trouble, right? So you can't start by just doing whatever you're passionate about. You have to start by earning the right to even be playing the game, right? Which means that you've got to be at that point saying, am I willing to put aside whatever I want people to come and get from me because I'm trying to get from them? And instead of that, focus at how can I actually serve others? Like how can I connect with who actually has a problem that I can serve in such a way I can be making money by helping them to be able to make more money. And that's something which for someone who starts off is so foreign because so often they think, I've just got to go and figure it out for myself. But the moment you think in that way, you get connected to the flow. Then instead of being in a desert where you're digging a hole, you're now in a river where you're digging a tributary. You're actually digging a flow off that. And that gets you to positive cash flow, which then allows you to go up to red level, which is survivor mode. That's when you're making just enough money to have nothing, which probably, I would say 70% of all Americans and all around the world, the middle class are people who may have a little bit of money, but most of the time they end up spending what they have. And the challenge with that is your business will always be a mirror of yourself. So this was a hard lesson for me in my 20s. I was trying to make businesses make money, but I wasn't myself being cash flow positive. I wasn't reinvesting the money, buying properties, buying assets, making sure they were making money for me. And so why would the money come my way? Money's always trying to find the best home. And if I'm not able to appreciate the money won't appreciate. Right. So as a result of that, I never could get those businesses to work. And it was only when I started actually focusing on my own wealth and actually being an asset to my business instead of a liability, the business then started working as well. And then from that, you got a number of different levels, right? You got orange level, which is a worker who knows it's all about work ethic now. The yellow level is the person who says, I can now make the music, the player, but like a guitar player, if you stop playing the music, then the music stops. So lots of solopreneurs who can't get away from their business because they've got to be there to make the money.
So the solopreneur's got a job. Maybe they created the job, but it's still a job.
It can
They
actually
have
be
no
worse
freedom.
in some way, right?
Yeah.
Because they think,
Oh, it is
well, at least
worse.
I could quit the job, but with this, I've got to keep on doing it.
You
right?
and I got to work nights and weekends, and I don't get overtime.
That's right. That's right. There's lots of professionals. There's doctors. There's dentists, lawyers, and they're thinking, I'm trapped in this because I'm selling my time. Without realizing you have to raise your consciousness to get from yellow to green, which is from a player to performer, and realize if I'm a performer in a band, I can even leave the stage and the music's still playing, right? So how do I do that? And the answer is by understanding that someone at that level is no longer asking the question, how do I make money? They're actually at the next level up asking the question, how can I help other people make money? These are all linked, by the way, to the chakra systems, right?
Yeah.
So
I
yellow,
know it's red, orange, yellow, green.
Oh, yeah. And yellow is very much about willpower. So if you're at that level where you're going, I'm making money, but I'm trapped in my job, it's because you're coming from a place of will. You probably got a long to-do list. You're probably all the time saying, what I will do is this, I will do this. And you're asking questions all about yourself. By green level, which is heart chakra, you're no longer saying, I will make money. You're saying, I will help other people make money. You know, and that means you're going to have partners, you're going to have team members, and you're thinking, if I hire that person, how much money can I make for them? And then, of course, you're going to attract the right people in. And instead of there being, saying, I'm going to be one person doing all things, it's like, no, I'm going to having all people doing one thing, right? And that means I've got to choose one thing that I'm going to do well, and then others can do the other. And so it's opposite thinking, which is, I think, one of the biggest challenges with consciousness in general and entrepreneurship in particular. They have glass ceilings where, just like gears in a car, you're going to end up burning yourself out by just trying to keep accelerating, when in fact what you should be doing is taking your foot off the accelerator and then upshifting to another gear, right? Which if you get that, then it's like, okay, I'm at that point where just working harder is not the answer anymore. I say one thing, which as a thought experiment, which gets quite a number of people I speak to wake up, which is just asking them to imagine if they think it's possible that there is someone else in the world right now today, there's someone else out there who is not as smart as them, who is not as hardworking as them, who is not as talented as them, who may not even be as old as them, they might be a lot younger, and they're already having 10 times the income, 10 times the impact, right? The vast majority of people in the world can imagine it. In fact, they know it's true. And so the question is, well, what is that person doing different if it's none of this stuff? It's not about hard work. It's not about any of those things. And almost always it's about the fact that they just took a pause and came up with a business model which is appropriate for their market in today's market. And if everyone does that, then they suddenly realize, even the successful entrepreneurs realize, holy cow, there's another level I could be going to right now, which would make all the difference. I think one example, just to finish off on these lines, if you go above the green level performer, the level above that, the blue level conductor, that's the person making all the music without touching any of the instruments. You know, so this is the person that people think of as the investor, the person that owns all the properties, has all the assets. They talk about multiple streams of income. But you can't just leapfrog up to that, because the only reason they've got multiple streams is because they've got multiple teams. A conductor can only conduct if they've attracted performers, right? And you can't just expect that you can earn the right to attract performers right now, because they're already going to the best conductors. So you have to take one step at a time and say, how do I really make sure that I'm building the 3 levels of trust? The 3 levels of trust are internal trust, which is your confidence. So when you start off, your confidence can be very low, and that's okay. You just got to build it step by step. External trust, which is even more important, is credibility, which is how much do people actually believe in you and your ability to deliver. And you don't have to start by trying to create the credibility from scratch. You can partner with someone who's already got that credibility. Even the Amazons and the Facebooks of the world are partnering with anyone who wants to partner with them, and you've already got the credibility of the best in the world. And then the most important of all of the elements of trust is predictability, which is your ability to trust someone that what they say is going to happen in the future actually happens. All the billionaires on the planet, the only reason they're billionaires is because they've told people what they're going to do with Amazon or with Microsoft. And so as a result of saying what's going to happen with the company and people believing in their predictability, those companies become worth billions, if not trillions of dollars.
So, okay, so now that's the conductor level. And what's interesting, I think you pointed this out, but I'm going to maybe underscore it a bit, is that a lot of times people are saying, oh, look at this success story. do you see how they don't do the work and they have other
Right.
people, and they're like,
Right.
okay, well, I start there,
Right.
and they don't realize there's this process
Absolutely.
to get there.
Exactly.
And I think from the color spectrum standpoint too, you're looking at higher and higher frequencies on the wave.
Totally.
So the wavelengths become higher frequency as you're moving up.
Yes.
So that's another part, I think, of the
They're moving
metaphor.
up, but they're still built on the ones below.
That's right.
So someone like a conductor has people who are performers that are high performing, that are their CEOs.
Mm-hmm.
They have high level yellow people who are the guys that actually can deliver profit and loss and build it, right? But you have to earn your way to this level.
Mm-hmm.
And it's amazing how many people want to be the captain of the football team and they haven't even played the game yet.
Right. Yeah. That's great. Well stated. So now you go to Indigo.
Yeah, so the last three are where it gets really exciting, right? Because like the first three are, I call a foundation prism, because it's about your own personal flow. So the idea of like everything from infrared victim up to the worker. And by the way, going to the education system gets you to worker, right? It's like, okay, now you'll have enough money provided there's a job there for you. Whereas the next three create their own job, right? Yellow, green, and blue is the enterprise prism, which is where all the flow of the market happens. And it's pretty incredible if you think that every single day there's some $9 trillion a day of money that's changing hands. And all you're going to be is one of the people that the money's actually changed hands with, because you're adding something of value, and you can turn it on, like tomorrow. But outside of the enterprise prism, when you've earned the right and the trust of the market, you've then got the alchemy prism, which is when you can change the world, right? And those last
The
three...
alchemy prism.
Alchemy prism, yeah.
Those are the top three.
They're the top three, yeah.
I love that
They're the
phrase.
ones that get to the light. And here's a really powerful thing. The people in the alchemy prism, who think of this like a theater, where the first three are the ones in the audience, right? They're still there, but they're not, like, or even a sports theater, like a stadium, right? They're the ones watching the game. Lots more of those people than the people on the pitch. The next three are the ones on the pitch or the ones on the stage. The final three, you may not even see them, but they're the ones that created the entire theater, right? So the one up at Indigo level is a trustee. So the trustee has got such trust now, they can make millions in minutes out of their trust. Richard Branson is at trustee level, right? Which means that, because he is trusted for being like a maverick entrepreneur, people want to use the Virgin brand. They'll pay him millions just to use the Virgin brand. Right. One level up from the trustee is where the action starts happening, which is the composer, right? The composer, which is the violet level, is where you're now making the music. The taxes we pay today, the laws that we follow today, these are all as a basis of a composition that someone created. Today, we're entrusting politicians who have never proven themselves to be good composers, right? I mean, they prove themselves to be very strong yellow level politicians, right, to get into office, but they're not necessarily the ones who know how to actually be able to shape an entire society. There's entrepreneurs today, like Elon Musk or Bill Gates, who actually have put themselves at composer level, where they've got such trust. They're saying, if I was to set up a society in Mars, here's how I would do it, right? Or if I was to rethink how we actually look after healthcare in the third world, here's how we would do it. And people are listening to that because they already have proven themselves in the trust they can have. And then the final level is legend, which is ultraviolet. So legend is the likes of the Steve Jobs and Nelson Mandelas of the world, where just like on a map, the legends don't even have to have any writing. They're the symbol of their time. And everyone on this planet has the ability to be leaving here as a legend, but you have to earn your way there. And too many people want to go out there and change the world, but they're not willing to change themselves, right? So it really starts by saying, well, what journey do I need to go on to get to that point where the real things I want to have happen in this world are happening because I've earned my way up to that level, and I'm working with others that are working up that level as well. A final thing I'll say on that is, I think what inspires me so much about the entrepreneur movement is, if you look at the people in the world who are the ones talking the most about making a difference in the environment or in equality or in an end to poverty, it isn't really the governments, and it's not even the large corporations. It is the entrepreneurs that are knowing that the best way to get to the future you want, best way is to be able to create the future, right? And so that predictability comes from that ability to say, if I can have enough other people that are on this journey with me, then I have the ability to be a symbol on the map, right? And to leave a real legacy.
What are some practical things somebody can do to enter this arena to get started here?
Okay, I'll give you a really, really simple one, which is just relationship with money itself. It's amazing to me just how much, because of the way the banking system works, that you're kind of encouraged that you just basically set up one bank account where you kind of throw everything into it, right? Which is a little bit like if you were basically a chef and you were to go out and get a lot of really great food to actually use in your recipe, and then you just put it all into one big bucket, right? And so many people are like, I can't manage my money but it's because they never set up a pathway that respects the flow of money in the first place. And so the way we always work with people within our community is we start by saying, just organize the money in a simple, easy way, which allows you to understand how money itself changes its nature as it goes from cash flow to profit to capital. And the way we do it is we say, go back down to your bank manager, tell your bank manager that you want to reorganize your bank accounts because you actually are expecting a lot of money coming your way, which is the truth because a lot of money is going to come your way. And then you think about it from the point of view of, first of all, setting up one account, which is your clearing account. The clearing account most people don't have. It's an account where every single month without fail, it's going to go down to zero, right? If you've got a clearing account that's going to go down to zero, then it means that you know whatever's going to go in is all going to go out. Right. And then from there, you then have a number of very important accounts. Think of this clearing account being like in the first lane of the highway. And then it's going into two other things that are going to pay for your day-to-day. It's going to go into your cash account, which is what you can take out with the ATM. So what happens to most people is they'll spend whatever money they have, and it never goes anywhere. But if you're now budgeting and saying, well, I'm just going to put like 200 or 300 in my cash account, I can spend that. But guess what? Once you spent it, you know it because you can't take any money out that month, right? And then you also set up a checking account, which is for things like every single month, the recurring things like your rent or like your car payments. And you know what that, you can predict that as well. And the whole goal is that knowing that those are going to go off to the next off-ramp, which means they're never going to go anywhere, provided all your money is just going to those two, you can never build any wealth. But even if you just start with your first $10 extra, which is what Rockefeller did, right? It's what Bill Gates did. Just $10 extra to go to the second lane. That's when you create your investment account, right? And that investment account just needs to be the deposit account. That's all it needs to be. So now we've just got 4 accounts. We've just got the clearing account, which goes into a checking account and which goes into a cash account. And then we just have, and you can just do direct debit. So it just all gets organized automatically. The investment account is your goal is you're going to go from $10 a month. You're going to get it to $20 a month, which is already a 100% increase, right? And then up to $40 a month. And it doesn't take that long for it to start growing, and you won't even miss it going to the investment account. But once that investment account gets to at least $10,000, and it will get there faster than you can imagine the moment you start thinking this way, from that middle account, then you start investing that in assets. You can invest it in property. You can invest it in a business. You can invest it in all sorts of different asset classes, which you'll get to learn about as you're starting to go down this pathway. And every one of those third lane cars that are now carrying your money will return some of that cash to you back in your investment account the next month. Not into your clearing account, not for you to just go out and spend on crazy stuff, but into your investment account. And that's going to, over time, start to create enough income that it becomes passive income eventually, so you don't even have to have the job anymore. Now, the key to this is not saying, I've got to figure out how to get out of my job first, or I've got to figure out passive income first. No, you just got to figure out flow. And if you actually start organizing everything into flow in this really simple, easy way, already you're freed from the worry of money from the very first week of doing this. The bank will do all this for free, right? And they'll actually set it all up and organize it all. But the most important thing to know is you can't expect to grow your wealth if you're putting it all into one big bucket, and then it's impossible to manage any more than a chef would never put all of the food in one bucket and then think they're somehow going to be able to create a masterpiece from that.
One of the words you used in introducing that concept was respect. And I think that's something that people need to have. There's got to be a respect for money, right? A respect for a discipline around it, which is what you just described, which I think is a great discipline. And I guess the idea of recirculating your profits from the investment account back into it starts to compound it, and that's how that account
absolutely
starts to grow.
Does. It completely does. And what you're saying is so true. Like money's an energy, just like anything, and it's always going to go to wherever it's going to be of most use. If you don't respect money itself, if you don't respect what you can do with it, and you don't respect how much people actually care about it or may care about it, you're never going to be in a position to accumulate it and actually then use it for good. And so I think that that's where a lot of people get it wrong, is that, I mean, can you imagine trying to treat a person, right, without respect, try and treat a person badly, and then expect that person to come back to you? Why would money be any different?
Makes perfect sense. This is a journey. And you have to be willing to understand there's phases of this journey. And you might have this quest, this almost lust to be a conductor, you know, but you have to also embrace the fact that it's a journey, and it's great maybe you have visions for something positive in the future. How should the journey, from the psychological level now, how should it be experienced? What do people need to have in the way of resources, mindfulness in their own psychology? What do they need to have to do this journey? Because it's not an easy journey.
It's not an easy journey. I'm a big fan of Carl Jung, because Carl Jung like really codified a lot of the things that I talk about within our programs. We talk about change, and the Book of Changes, the ancient Book of Changes, the I Ching from China, that was published in the West for the first time by Carl Jung. And Carl Jung's whole focus was on archetypes.
I didn't know that. So Jung was the first one to publish the I Ching.
Yeah, published in the West. So,
Wow,
so what's really interesting about that whole story was that it was actually a missionary who was out in China who found the I Ching and actually was the first to actually go through and translate it into German, brought it back and actually met up with Carl Jung. And then Carl Jung basically was the first to publish it. He published it in the West in about, I think it was like 1920. And then his book, Psychological Types, came out a few years after that. And all those different ideas of like the different energies of how we go about managing our lives and our frequencies all turned into words we know today in psychometric testing, like introvert, extrovert, and intuitive, sensory. But all of that like really comes back to the fact that we have natural archetypes, and someone who took that one step further was Joseph Campbell, where Joseph Campbell talks about the hero's journey. And with the hero's journey, the interesting thing is these specific phases that we go through. The first one of which is the call to adventure, being even aware that when someone might be speaking to you about a particular opportunity, that this could be the turning point for your entire life, right? And beginning of adventure. This interview could be the very beginning of someone listening to this and saying, I could just listen to this and go back to my life, or I could listen to this and actually say, this is a sign, right? I've got enough of them, and now here it is. It's time to take action. I'm going to go on the adventure. And the moment you have that person notice the call has been received and then decide to take it, they become the hero right from that very moment. The second part is the interesting part. The second part is called the road of trials, because the road of trials is where everything gets thrown in your way to not to stop you, but to test you. And the number of people that quit at that second point, because they're like, well, obviously this was way too difficult. Obviously it's not right for me. And they quit it, as opposed to say, wait, I'm actually being tested at this point to see if I'm worthy for the journey. And so the next time someone goes on a journey and actually starts noticing things are tough, it's because they're meant to be, right? But if you actually go through that second phase where things are tough and you're still persevering through, then you get to the third phase, which is the boon, which is basically like the reward. And it's where you actually get to a level of success, which is because you push through. Many people stop there as well, right? But that's not the end for the hero. That's only halfway through the journey. The next part after that is the return, which is where you're going back to wherever you got started from to share that gift. The reason we're having so many people in the world today who are entrepreneurs or people who are successful share it is because they're ongoing with that journey, knowing it's not about what you're getting, which is important, it's what you're giving.
You become a finder rather than a seeker.
Absolutely right. And so at that next point, which is the return, that's the point at which the hero then is able to complete the journey before starting off again. And I think that's such a powerful visual for people to, especially through the dark times, because anyone who's got to success has had to have a lot of sacrifice and have a lot of times when they had to kind of question themselves as well. But if you really start noticing these stages, it's far easier to then navigate through and also to be mentored through by the right person who's also gone through that same journey.
It's really interesting because you said sometimes they start again. It's that people can say, hey, I've made the full journey, but now I'm called to a new one. And the whole thing starts all over again.
Oh yeah, well there's people who've got multiple journeys happening at the same time, right? Like I'll look at all the different companies I have and the different team members that I have, the partners I have, and knowing every one of them is going on the same journey. I mean, who needs Netflix, right? when you've got this real life theater, which is the planet, and you've got all these incredible stories that are actually unfolding right in front of you in real time. That experience of knowing there's a world out there where there are these real life heroes every day that you can actually get connected in with and that want you to be part of their journey and they want to be part of yours as well, it becomes something which really gets to the core of what entrepreneur spirit is all about.
So I've got to ask this. You've got this extraordinary well of energy. And, we're just talking about things that you're passionate about, and it's stream of consciousness. It's coming out. You've got models, frameworks. You see how it all works. You've got, your purpose in it all, and you obviously have a passion around it. But if I were to ask the question, what drives you? I mean, this is really like strong passion, and it's not blind passion. I mean, it's very well thought through. But what is driving all this? Where's this well of energy that you're tapping into that brings you to the presence that you have?
I had a really interesting experience on my 50th birthday, and I had my birthday in Japan, and there was a whole group of us, and we went to bonsai. It's like a bonsai garden, bonsai museum. These bonsai trees are beautiful, and we were having a tea ceremony there. And there was a woman who was like I think it was like who would know you can get a black belt in tea making, right? But this woman was like a 7th Dan tea maker. And she was spending like half an hour making the tea. And in the process of making the tea, she said, do you know why we spend so much time preparing the tea and preparing the environment? And we said, why is that? And she says, because of this Japanese concept, which she actually showed us the painting of the words, which is Ichigo Ichi. And she says, Ichigo Ichi means treasure every meeting, for it will never happen again. Right? This idea that like if you actually really take the present and realize that it actually is sitting in a tiny little droplet of infinity, and that at every moment it has to be cherished, provided you're thinking of infinity as well. We walked out from there and there was an old man who was actually there clipping the bonsai trees, and some of the team got in a conversation with him, and it turned out he was the owner of the whole place, right? He was in his 70s. He'd made his money in ramen noodles, and he'd put it all back into this. It was like $20 million worth of bonsai trees there, and he was there working on it. And we asked, well, how much do you work on these trees? And he goes, oh, I'll get here 6 in the morning, be here until like 6 or 7 at night, like 12 hours a day. And we're like, well, how long have you been doing that for? And he's like, since my retirement, the last 20 years, this is what I've been doing. And we said, why would you work so hard on these trees? And he said, because you don't understand, these trees will outlive us all, right? And he showed us the tree. This tree's 1,000 years old, right? That's like 15 generations from someone who died, their child grew up, died, another child grew up, died. Like 15 times that happened. This tree saw all of it, and now I'm looking after it. And after me, there'll be another 15, 20 generations that also will be looking after this tree. How could I not do what I'm doing? Because if I stop, I'll be letting down everyone before me and everyone after me as well. This idea of thinking outside of ourselves to a greater good. Back to one of my mentors, Buckminster Fuller, he has on his tombstone the words, call me trim tab. And he explained trim tab as the fact that if you take a massive ship, the ship, in order to move, has got this tiny rudder at the back. And you'd think the rudder is the thing that's making it move. However, they found that if you put on the rudder another rudder, which is called a trim tab, a teeny weeny little just slice of metal, and so when you actually are moving the rudder, this trim tab also moves a little bit, the boat actually shifts double or triple as far just through this tiny, tiny little piece of the ship, which is less than 0.0001% of the metal on the ship. That's the power of an individual. The fact that he saw his whole life as being something where he could move humanity. If he could do that, how could you not, right? I think for me, what drives me is I think of my great-great-great-grandchildren. And I think about them looking back in time, because they'll be looking at Facebook archives and things like that, and they'll know that what happened on the planet at this critical moment right now, when we're in the final exam, that during this time now, their great-great-great-great-grandfather was alive. And they'll be asking, well, what did he do while he was on this planet when he already knew better? And I think about that every day, because when you come with that sense of mission, you come with that sense of absolute obligation, that how could you not do everything you can to make a difference in the world? That's what drives me every single day. And for me personally, I feel that when you are tapped into that much larger piece of humanity itself, you get to feel it. You get to experience it in a very different way than just thinking of yourself, which I think for a lot of us we do. This is the difference of being a drop in the ocean compared to being the entire ocean in a drop.
So you seem extraordinarily passionate. Obviously, I think you're fulfilled by this purpose. But your smile tells me you're happy.
Yeah, I'm absolutely
Are you happy?
I'm very happy. Yeah, and happy in a way where it's not a complacent happiness. There's a good friend of mine, Lynn Twist, who wrote a book called The Soul of Money, and she came up with a really nice phrase for this. She called it blessed unrest. She said that there's a part of us where we need to live in grace, we need to live in happiness, we need to live as if it's all complete. So we're not needing anything, we have no chip on our shoulder, we have nothing to prove, but the unrest is still there. There's still incomplete business, and for us to come up every day in absolute gratitude that it's all already complete, but with the power to realize that the future can be so much greater, and so there's still more to be done. That's how I show up every day.
And it shows. A little birdie has it that you journal.
Yes, I do.
So you obviously think that it's a great practice.
I think it's essential. I think it's
Essential?
Essential,
Okay.
yes. Yeah.
So tell me about your journaling.
Well, okay, first of all, I think the reason that it's essential is because there is a number one skill set or key muscle in the brain you have to be successful entrepreneur, which comes back to this idea of predictability and its vision. And the reason vision is because we have two types of recall in our mind. We have backwards recall, which is called memory. We have forward recall, which is called vision.
Yeah.
And the difference of those two is everything. Because if your memory is stronger than your vision, you're always going to be stuck in your past instead of moving to your future. Though if you speak to any of the people out there, from the Nelson Mandelas in the world when he was out there saying, I'm going to change South Africa, through to the top entrepreneurs today, who are always, when you meet with them, never talking about the past but always talking about the future, is they have such a clear memory of the future, of where you're heading and how you're getting there. And so when we go to school, we're learning how to memorize. We never actually learn how to vision. And so when I am journaling, what I'm doing is I am creating visual memories. And I'm constantly journaling about my future. I'm constantly drawing out what it looks like, not just for myself, but also for the people around me, for the planet itself. And so when I'm drawing, I'm opening up that visual part of my brain, and that's where all the magic happens.
And it comes full circle. You started out as an entrepreneur drawing.
Yeah, absolutely. So that what is helpful, right? That all through my life, this is what has been the way that I've opened myself up to bigger thinking. And in fact, all the way through school, I would always be drawing in class. And to begin with, I got told off for doodling. But when the teachers started realizing it's actually how I memorize and remember things, then they were actually quite happy for me to continue.
Wow. So you verbally, I think, created a great vision, of what the future could be by raising the consciousness and bring more entrepreneurs into the world, et cetera. I see that you materially actually write these things down, which is really awesome. And it's exciting, just to hear about your ventures, the nature of what it really means to be an entrepreneur, understanding the phases of it. I mean, you really have thought about this for a long time. Is there any other aspect that you'd like to share about the spirit of the entrepreneur and what it means to the future of this planet?
I think one thing which I got inspired by after realizing Buckminster Fuller had put out this whole idea of like the final exam as this scary thing that we actually had to pass, is he also talked about this thing called the world game, right? And the idea of the world game was making a game that was fun enough and that had clear enough rules that everyone could play. And the idea that we could actually change this planet for the better for all of us by playing the game collectively. I think we're living in a world now where that's reality. You have the United Nations that created the 17 United Nations Global Goals in 2015. They've got a target by 2030 of us achieving those goals. For everyone as an entrepreneur to realize there's no excuse anymore to not actually step up and to do something which is truly meaningful, measurable, that's going to allow you to build your income and your impact, but it's all out there and there's others already on that pathway and they want to work with you as well. I think that that's one of the most powerful messages for anyone watching this, is don't wait, but actually get out there and realize you have that spirit inside yourself, and that you can actually allow yourself to just step into that space and allow yourself to grow. I mean, I have a story which is probably one of the most impactful stories that I've ever had about this whole idea of the power we actually have. Could I share that story?
Yes, please.
Yeah. It actually came out of a chance reading from my library in our resort in Bali. So we have a library, which is a magical library. There's always more books there because everyone who comes also leaves their books for other people. And someone had left a book. They'd come back from India and they left a book, which is a very obscure book that someone else took. I've never seen it again. But in there was a story of a raindrop. And the way the story goes is this raindrop drops out of the sky and it lands on this jetty in the middle of all this rain. And as it gets to the jetty, it plops on the jetty and it goes, oh, look, I'm a raindrop. It's like, I've never been a raindrop before. It's like, this is fabulous. And it looks around with this self-awareness of being a raindrop and it sees there's other raindrops around as well. So it goes, great, there's other raindrops. This is very exciting. I get to be a raindrop for a while. And as it's looking at the other raindrops, experiencing separation and at the same time experiencing the human condition, which is here I am, but I'm separate, it looks and sees there's other raindrops which aren't even hitting the jetty. They're going straight into the ocean. And so it goes, oh my gosh, this is terrible because they don't even get to be raindrops and maybe one day I won't be a raindrop. And this experience of living suddenly gets to the face of death, right? Like I'm only here for a while. So as it's contemplating that, it decides it's going to try and stay on the jetty for as long as it can, and then the wind comes. And when the wind comes, some of the raindrops on the jetty go flying off the jetty, and it realizes, if I'm just staying here, I'm in big trouble. I better squash myself down to be as small as possible so I don't get blown off. And it does what so many of us do in life, which is actually just become as small a version of ourselves as we can be. And it does it holding on, and as it's doing that, feeling great about the fact that it hasn't actually chopped off at this point. The sun comes out, and it notices some of the other raindrops that are holding on are now evaporating. Yeah. And as they're evaporating, it really panics, because it's like, if I stay here, I'm going to disappear, and if I jump, I'm going to disappear. Whichever way it goes, I'm going to disappear. And so as it's thinking, well, which one should I do? It realizes that it knows for certainty that by staying here, it definitely will be gone. Whereas if it jumps, it doesn't actually know when it hits the water, will it stay as a raindrop or not. So it decides, because it just doesn't know, it's going to make that leap. For me, this is the whole story of every individual who is safe where they're at, but realizes it's not the final option, and the idea of actually taking that leap of faith. And so it decides, out of the two, it has to leap, and it builds up the courage, and it steps up, and it gets caught by the wind, and it blows off the side of the jetty. And as it braces itself for landing in the ocean, it's actually happy to say, I've lived a good life, I've been a good raindrop, and whatever happens, happens. But then when it hits the water, the most magical thing happens. Instead of the raindrop disappearing, it actually becomes the entire ocean. Yeah. And for me, there's this power that I see every time I see an entrepreneur who takes that leap, someone who's in a job, someone who is in school, say, I'm gonna go out there and I'm just gonna risk it. I'm just gonna see what I'm actually capable of. And for every person I've seen who takes that step, sometimes it's not easy, sometimes it takes longer than others, but for every one of them, they get into tapping into a much, much larger spirit than themselves, and they realize that was the true self that they had all along.
Wow. Well, that's truly beautiful story and metaphor for what this is all about, really. People, think it's about money, but this is really what it's about.
Absolutely.
So I thank you so very much for just sharing all that wisdom and for what you're doing in the world.
Thank you.
Thanks, Roger.
To see the next episode in the Money Revealed series, check the video right there next to me. I think you'll love it. Continue to believe, and I'll see you there.
Once you're using blockchain without knowing that you're using blockchain is when, frankly, the opportunity is over.
Yeah.
So right now, the more complicated it is for people, which is what I tell them, the fact that this is difficult and hard means that there's an opportunity here.